At this point, as we go for the break, please take note that what I have done so far in the accounting principles is to deal with a lessee recognizing and measuring his asset and his obligation, which is most common in the exam. When we come after break, I'll also look at exceptional cases that it could even come with a sale and leaseback. A sale and leaseback. But let's have a break. I come back to do a question, which is in this area, based on those 7 things we've said in there. And then after that, I summarize a sale and leaseback, and we'll do another question. In the chat, somebody says, the same sides moving to the accounting ways of lease records. Okay, the same sides moving to the accounting ways of lease records, lesser for finance lease. Okay, Gilbert, I didn't understand what you're trying to imply, but maybe you're correct. I don't, based on what you're trying to raise here. But to be honest, let me tell you, the way lessees account for lease is not the way the lessors account for leases. It's not the opposite. You know, if you talked about standards like, say, Ifrs 9, financial instruments, you'll say that the person who has a financial asset, especially assets carried at amortized cost, is almost the same way but opposite to the way the other person who has issued that loan instrument says, I'm accounting for the financial liability carried at amortized cost. Those are the same. They're the same because this person called the financial asset says, I'm amortizing it using effective interest rate, and I'm recognizing it in my P&L as interest income, while the other person says that, yes, I have a financial liability carried at amortized cost. I'm also amortizing it by recognizing a finance cost, and I'm taking it to P&L, and they're using the same figures because both are using the effective interest rate to compute the interest income for one person and the interest expense for the other person. So IFRS 9 allows that equilibrium, that equal application for both this party called the person holding a financial asset and the other person holding a financial liability. But IFRS 16 is not the same. Whereas the lessee is doing these 6 things, I hope it's seven things. The lessor is doing things that are completely different. First, the lessor says, do I have a finance lease or do I have an operating lease? If it's a finance lease, what should I call it in my financial statements? I would call it a lease receivable. He will not call it a right of use asset. He will not call it a lease obligation. He will call it a lease receivable. At times calls it a finance lease receivable. How do I measure it? I measure it with the principal amount and the interest amount. You see, for him, yes, that interest and principal amount is the only thing that can look similar here. But for him, it does not say, I'm depreciating. Like here, we say, depreciate that right of use asset. There, they don't do that word. You don't depreciate it. So Gilbert, it's not straightforward that, yes, it's the same mirror image. You know, in English, you would call it mirror image. It's not exactly a mirror image like it would be under IFRS 9. Here, there can be differences. The lessor can never say I'm depreciating because that asset, he has no control over it. He has passed it over to the lessee who's using it, and the wear and tear of the asset is at the lessee's premises. So that's why it's the lessee that says I'm depreciating the right of use asset. The lessor never says that. Okay, so let's have a short break. And then we come back, maybe 10 minutes. We come back and deal with a past paper exam question at this point. Meanwhile, I'll leave this clear that our next session after this session is in the evening, not immediately after today. Sorry, after this session. So we have a break, a long break up to 5 p.m. So I'm going to end at midday. Then at 5 p.m., I'll come back again to deal with that next session. So let's have a 10 minutes break, then we'll return.